after flipping your first multifamily, which I say flip, I mean, you're turning it.
Yep.
And really it goes down to, and this is how I came up with the slow flip strategy with single family. That's what people do in multifamily and commercial. They do flip. It's just over a 3, 5, 7, 10-year period. They flip the property, they increase income, decrease expenses, then they sell. So after you went through that process with this property, what were some of the biggest differences that you noticed? And because I imagine you've gone through that, now you're starting to think back through your single family career. What were some of those differences that really stood out?
Yeah, there's a bunch of differences in the industry that I think I like to highlight, or that I like the most. So I think the biggest one, and this is just my personality, I really like the professionalism that comes with the commercial real estate space. And I mean this with no disrespect. There's a lot of jokers in the single family space. And there's a lot of clowns. And there's a lot of people that will waste your time. I'm not saying there's not that in the commercial real estate space, but there's less and less in that because the clowns get exposed very fast. Right? I can talk to you within 5 minutes and tell whether you're a player or not, usually, because you know what you're talking about, right? So there's the people that are in the space are more sophisticated, right? So not only the sellers and the buyers, but the investors are significantly more sophisticated, right? We're talking about cap rates and cash on cash returns and IRRs and equity multiples and adding value and how, what's the yield on cost on the debt? Like it sounds like a totally different language to some people in here, right? So the conversations are much more sophisticated. So it requires a higher level of education, which to me means it requires a higher barrier to entry. And I like that. I like the fact that a guy can't just watch a YouTube video and decide he's going to go flip an apartment complex tomorrow. I like it. I want it to be hard. Because if it's hard, that means it has more zeros at the end of the checks when I get paid. That's sort of how I think about it. It's harder, right? It's more rewarding. So that was one of the biggest things that I noticed.
And I noticed that too. A little caveat on that though. Do you find that is mostly true in the mid to larger multifamily, say the 50 plus units versus the 10, 20 units, which are largely mom and pop owned?
Yeah, I think everybody in the process, if you're commercial, which is technically anything 5 units or more, the title companies, the insurance, everybody's a little bit more sophisticated. But when you go up in scale, yes, 50, 100 plus units, everybody's pretty significant, especially if you're bringing on investors. Like my job sort of day to day is to find investors to partner in these projects. So the way I present myself, the way I talk, the questions that I ask, the questions that I get asked are very high level compared to tell me about a flip or something like that, right? So yeah, I mean, I kind of find that in all the space, but definitely the bigger, if you go 300 plus units, that's more institutional. Now you're talking to private equity. Now you're talking to the BlackRocks of the world, the insurance companies that will stroke you a $20 million check, one check, right? The questions that they ask are very sophisticated, right?
Well, they don't even want to talk to you unless they can deploy 10 plus.
Correct. They have $5 million minimum check size. A lot of the people do. Yeah.
So in what ways did you find single family better than multifamily?
So I still love single family in the sense that it is very accessible to people, right? And I think that it's a great way to get started because if you're somebody who does have limiting beliefs and the only way for you to say get to the point where you want to get commercial, if it means you have to step on the single family space, then so what? Do it. There's nothing wrong with single family real estate. I do like that it has a low barrier entry in some regards because of that. And if you are sophisticated, you stand out more, I think, in my opinion. The smart, savvy...
100%.
Yeah, right. The smart, savvy, sophisticated, trustworthy people that close, doesn't matter if it's commercial or residential, they just do better, period, right? And the clowns get exposed, right? So I do like single family in that sense. I like it that it's easier to sell. When we go to sell a deal, I mean, it might take a whole year for us to sell a deal. We have to think about it, decide we're going to sell, get a BOV from the broker. What's the broker say it's worth? Oh, I don't like that BOV. Let me switch brokerages. Let's get their BOV. I like that one a little better. Let's sign a contract. They got to put a marketing package together. There's 60 days of marketing, then it goes under contract, then there's due diligence. I mean, that's a 6 to 9 month window to get a property sold, right? If I have a rental and I want to flip it, I mean, that might be 60, 90 days, give or take. It's a little bit quicker. And because there's less money involved, it's a little bit smoother, I would say sometimes, because there's a lot of legal involved on the commercials, a lot of attorneys that like to slow things down.
Yeah. I mean, single family is a B2C business by and large. I mean, you can sell to investors, but mostly you're selling to owner occupants. Multifamily, it's B2B. You're selling to other investors. That's it. But one good thing about single family, I think, is it does give you the ability to learn at a lower stakes game some good, valuable skills of sales, negotiation, talking with people, deal analysis, budgeting, project management.
Absolutely.
Project management's a big one.
Yep.
And those, to some degree, do transfer over. Multifamily is different, but those transfer over a little bit.
Absolutely. The skills that I learned doing residential for 2 years definitely helped. I would say for sure. And I have no regrets, but I tell people all the time, if you can skip it, do it.
Is there any like one skill that you think really stands out the most?
I think the networking side of things, to be honest, that is you had asked about differences between single family and commercial. And I think that is actually a big difference. You've been to a lot of single family networking events, but you've also been to a lot of multifamily networking events. I feel like the networking is much different. I feel like in commercial real estate, guys are more out there in the sense that they're willing to walk up to you, shake your hand. What do you do? Tell me about your business. Okay, awesome. Exchange business cards and then follow up afterwards. I feel like in the single family space, people are just kind of like scared to go say hi to you and go shake your hand. Hey, what do you do?
Yeah, the single family, you'll get a lot. Well, I'd say in multifamily, there's obviously new people there too.
Sure.
But in single family, it's new to the industry.
Yep.
Like if you're new in real estate, you're probably new to the entire industry. Whereas multifamily, most of the time, like you've been involved in some sort of real estate.
There seems to be, I'll use the term scarcity mindset when it comes to single family a little bit. At least I notice when you talk to investors, they don't want to like share their secrets. Where in commercial real estate, I feel like everybody's trying to help you because the pie is so big that if we can do a deal together, we can both make money. I don't have to, like, if we're fighting over one house, we're not going to want to talk to each other because we're talking to the same wholesaler and I want to win it and I don't want you to win it. But if we're investing in the same $20 million project, well, let's work together, Chris. Let's figure out how to make it work. We're both going to make money here, right? So there's a little bit of an abundance mindset versus a scarcity mindset.
Yeah. But regardless, it isn't, I mean, real estate is a social business. So
yep.
yeah.
So you have to get out there. You have to network. You have to network. So if you're at these events and you don't set a goal for yourself, like I want to talk to at least 5 people and go deep. It's not speed dating. It's not musical chairs where I want to talk to everyone today before I leave. Like, no, I want to talk to 5 people and have really deep conversations. What do you do? Where are you from? What got you into this? What are your goals? How can I help you? Right? Just be very intentful. And doing that in the single family space helped me when I got into commercials so that when I was going to networking events with very sophisticated people that have 40, 50 plus $1 million net worths, even though I didn't have that net worth, right? It made it more comfortable for me just to go up there, say hi, shake their hand. What do you do? And learn by listening to them and asking questions, I could figure out how could I add value to them without asking, hey, how can I add value to you? It's because I was asking questions in the networking conversations. If they were talking about, like, yeah, man, I just did this deal and we had such a hard time raising the money. We really got down to the wire and I thought we weren't going to be able to close because I'm asking questions about their last deal. In my head, I'm hearing that guy needs help raising money. That's how I can add value to him. And if that's my skill set, I now know I can help him. Let's set up a call after we meet.
Yep. Love it. What ways is multifamily better than single family?
I'm biased, but I think a lot of ways. I was talking to somebody else about this. I actually think that multifamily is less risky, and even if it's a duplex, 2 doors, it's less risky in my opinion, and that's because you have more than one tenant. So if you have a single family house and your tenant moves out, you're screwed. You have to pay the mortgage yourself, right? There's nobody else there generating income. If you even have a duplex, which is just one more unit, now somebody else is on that other side, at least a part of your mortgage is being covered. If you have a triplex or a quadplex, 3 or 4 unit, you might have all of it covered. And if you have 5 or more units, if somebody moves out, one of the units, maybe even 2, your mortgage is probably still 100% covered. In my opinion, there's less risk because of that. Are the deals more expensive? Yes. Do they require more money? Yes. But from a risk standpoint, I'm not at risk for having low occupancy or not being able to pay my mortgage because there's more units. So that's why at our firm, we buy 100 plus units or more so that if I'm 90% occupied, meaning I have 10 vacant units that are not making money, I'm probably still cash flowing. So in my opinion, that's the biggest one, that multifamily is better than single family. It's just, I actually think it's less risky. And the biggest one besides that, I would say, is in residential real estate, you can only force appreciation so much, right? So if you buy a $100,000 house, and you put $200,000 in renovations, is it worth $300,000? No, you probably over renovated it. In multifamily, commercial, not duplex, triplex, and quads, but in commercial, so anything 5 or up, your property is valued based on its NOI. So it's income, net operating income, right? So if I force the NOI by not only raising rents through renovations and better customer service, but I cut my expenses, now I have more money on the bottom line, my NOI is higher. I divide my NOI by my cap rate. That's my value when I go to sell it. So I don't have control over the cap rate. That's the market rate of where the cap rates are, right? Sort of supply and demand. But if the market cap rate is, let's just say it's a 6 cap for like a C-class product, and I know that within general, it's going to trade around a 6 cap, I need to force my NOI as high as I can, because the more I force that NOI, the more money I make on the property. You can't do that in residential real estate. You can't keep putting money in the deal and cutting expenses to sell it for a higher price.
Yeah, it's a multiplier. So every dollar extra you're getting to the bottom line, you're profiting in equity at $1.50, $2.
You know, pull out your phone, put 1 divided by 5, and that's an easy example. It's $20. So for every $1 of NOI I create $20 of value. I mean, multiply that times 6 figures, right? If I create $100,000 of NOI on a 5 cap, I added $2 million of value to a property. When I go to sell it, that sticks a lot of money in everybody's pocket, right?
Can't do that in single family.
Can't do that in single family.
One thing that I like is the level of sophistication of all the parties. So with single family, I mean, you can do it all yourself. You can find the deal. You can even pay cash, so there's no financing. Or you can obviously get a lender. You can manage it yourself. You can go out and find a tenant yourself. You don't need to list it. Or if you are an agent, you can list it yourself. All that you can do yourself, which means you have to do all that yourself. That's
a lot of work.
It's a lot of work. But with multifamily, you're dealing with teams of people. Even with smaller units, it's still teams of people. Like, you're not personally going to manage a 30-unit apartment complex. You're going to have a resident manager or a small property management company, and you have also asset managers. You just have better teams of people, and it's usually not just you. There's several people either internally or through JVs or whatever that you're partnering with to do these deals, which in my view makes it significantly more passive. It's not, I mean, you can be on the passive side,
sure,
but even on the active side, knowing that you've got very sophisticated teams dealing with all these components, and you just need to focus on this one thing, like just your thing.
Yeah, in commercial, you become more of a specialist. In residential, to your point, you kind of have to be a jack of all trades, or a lot of people choose to be a jack of all trades. They want to go find the deal. They want to analyze the deal. They want to get the financing. They want to negotiate with the wholesaler or the realtor. They put it under contract. They close on it. They do their renovations by hiring a crew, right? Then they list it. There's a lot of steps there. In commercial, or at least in the multifamily space, usually you become, I always say you pick one of 3 buckets. One is either you're a deal finder. I'm really good at finding deals. And that doesn't mean they're all off market. Maybe it's working with brokers, right? Having strong relationships with brokers, because the brokers have all the deals. That's one sort of place you can plant your flag. You can be really good at raising money, right? So having the personality, sort of a sales personality, an outgoing personality to talk to people, find investors, find people that want to write you $50,000 to $250,000 checks. And that's sort of our bandwidth, most of our investors, right? You go out there and you find them and you bring them into your ecosystem. You nurture them, because I don't meet somebody at a conference and they write me a $100,000 check the next day. That's just not how it works. That could be a 6-month to 2-year window before when I meet them for when they write me a check. That takes time, right? I have to go on podcasts. I have to go to lunch with them sometimes. I have to have multiple phone calls. Sometimes they're watching our webinars that we have. They're coming to our in-person events here in town. We're meeting them if they're out of state at lunches and conferences and stuff. There could be a 2-year window before they decide they're going to write me a check, right? So that is one. The second one is being really good at raising money. The third one, which is less, it's much harder if you're getting started, because you probably don't know what you're doing, is to be an asset manager. It's hard to say, you know what, out of the 3, I want to be an asset manager. Well, my next question is, what assets have you managed? If the answer is none, you're not really adding any value to me, right? So the easiest 2 to get started in is being a deal finder, finding good deals, right? Or raising money. And the most common one that I see people getting started in the multifamily space is on the money raising side, because it has, I would say it has the lowest barrier to entry.